Hello, hello, hello. So this is just a bit of a follow-up on the previous video that I did, and it's just to cover a few areas in terms of, as I said, this period is going to be a very good buying opportunity for people. Okay, so obviously, our dear friend there are some people that are buying into the stuff that our dear friend at BlackRock, Larry Finn, is offloading. You know, do feel for Larry. Poor Mr. DEI, such a lovely globalist. Yes. Yes, it's nice when some of the globalists lose some of their wealth and some of their power and influence, isn't it, boys and girls? And gives a bit of an opportunity for the rest of us mugs to pick up a few things that Larry's offloading. Yes, we know that he's offloading. A lot of these fund managers have been offloading a lot of stocks lately. A lot of stocks. And obviously, even with the certain things that they need to they've been leveraging on, which is bonds, they've been forced to offload some of those as well, as we know. Poor Larry. Yes, my heart bleeds for you, goes out to you. Yes. Thank you, Trump. Yes, you couldn't have done it to a nicer person. Now, for the rest of us mugs, what are the opportunities? Well, the opportunities are going to be in areas that traditionally, when lower interest rates started permeating the system, and you also get, let me just cover my ass. This is not financial advice. You want financial advice? Go to a financial planner, go to your accountant, whatever. This is not financial advice that I'm giving you. I'm just giving you my opinion. What sort of opportunities, what to look out for, and how to make use of the opportunity that's coming your way. That's all. You still have to do the legwork, okay, in that regard. Now, getting back to where I was, what are going to be these sort of asset classes? Well, I wouldn't be rushing into commercial property, I can tell you. But residential, yep, there's going to be growth in that again. But it will vary. Like any sort of market, it will vary, and it will vary from country to country. So it's not something that I can actually tell you, go here and buy this as an example, because you may not live in that area or have accessibility to that specific market. So what do? Well, you've got history. Go back, get the data, historical data, and look at areas that each time the central banks have lowered interest rates and money printed, which areas had the biggest growth. If there is a consistent pattern between the different periods that they did that, there's your answer. The other thing is, are you holding it short-term or long-term? Short-term, obviously, you're less concerned about when the party's over, because the party always is over at some point in time. If it's not a long-term investment, it's a short-term investment, you're looking at the biggest jump in the growth, the capital growth, the biggest capital growth that you can get of that specific asset. Okay? So that's the sort of data you want to look at. And there's a lot of historical data people can actually search. Today with the AIs and all that, they can Google that stuff. Use your brain, Google the stuff, find out from the AI which certain areas, so you don't have to do all the actual work. Find out which areas had specific sort of growth in this period of time, because you can, which are the period of times there was lowest interest rates. You can go and look in your own country, see which areas are. You've got the years, bang, check, and do comparison, which areas had the biggest growth. Then which areas, when things came off, had the least contraction. So you may go, yeah, I'm a long-term investor. I'm not interested. I just want to buy something cheap and then basically hold on to it. Fine. If you want to do that, then you're going to be looking at areas that have good growth, but also have less contraction. That means they are the sort of, you could say, the middle class areas. Rich areas are going to come back a bit more, and poor areas definitely or won't even get a lot of growth. So it's going to be the sort of your inner city, certain suburbs, depending on the country as well. It could be further out or could be further in, depending on the country, as I said, where you're going to get that sort of growth. And that's the areas you're going to be focused on. So now that you know what to do and how to do it, and looking at the historical relationship between those the capital growth of those specific areas, that's how you're going to relate it back to what has happened before. And if there's a consistent pattern historically, those are the areas you're going to focus on. It's not complicated in rocket science, okay? So that's as far as the property goes. You have to do the work. AIs make it much easier nowadays to do that. In the more developed part of the world, it's going to be basically, solid. If you're in America, I'd be more looking at putting money in the NASDAQ rather than the S&P 500. NASDAQ always does better. In other countries where there isn't what I call the Silicon Valley stocks, it's going to be certain blue chip sectors, or sectors when the world economy takes off usually do really well. And it will vary from country to country in that regard. It will be usually it's bank stocks, or it's in certain countries where there's strong manufacturing. It can be those sort of name brands. Sometimes not. In some other countries like Australia, if things pick up, our commodity sector does much better. It's been pounded at the moment, but that can actually recover. And if things take off again with cheap interest rates in the system and money, people start producing more things, doing more activity, those sort of things that have been pounded quite a bit, the commodity players can recover quite well, and you can make a very good profit from those. So it'll be varied from country to country. And obviously some people that are a bit more sophisticated, as they're called, you know who you are, can always invest in other exchanges beyond your country as well. You're not sort of bound to a specific thing. Now, most of my subscribers tend to be North Americans. So obviously, both on the other channel and this channel. So as a consequence, I'm going to focus today a bit on them, since they support me more than most others in the world. So I'm going to be biased towards them rather than the Aussies. I'm going to be more biased towards the Yanks. Anyway, so let me just share my damn screen. Pick that. Okay, so most of you people probably already know these, stocks: Amazon, Google, Meta. Some people may not know TSM in Taiwan. It's TSMC, and Nvidia. Let me just minimize that. So looking at Amazon. So we're looking at, this is over a year. It's down to about 181.28. And today, it's 174.33. So it's lost all the gains this is sort of the gains coming into the, up until February, it was 242.06. So over the whole year, it's lost about 3.83%. Okay. So that's what it's done. Probably should have increased the size of this. Let's do that. As you can see, there's percentage. Okay. And all the way back down here. So when we're looking at Alphabet, which is the Google, again, similar picture, 156.88, 155.50. So 0.88. At the top, it got to 207.71 cents. Okay, so that was the free as Trump was coming into power, or, you know, the potential of his being elected and eventually getting elected, you know. And this is basically him throwing in the spanner into the works to force a change in direction. So that's what he's done in order to get a change in direction. So go back here. Last 6 months, because I can't get I wish they had a 3-month thing. Okay, last 6 months, as you can see, more than 7% reduction. Google, 5.5%. Let's look at Meta over the whole year. Gone from $157.693 all the way up to, again, in the same period of time, you know, 736 and 0.67 cents, all the way down to 502. Okay, so I've lost about 13 in that period over the year. Let me go back to the whole year. It was there. So they've actually, because yes, I should have changed it. So in the year, they've actually gone up overall, but very little, since they lost most of the growth. So Meta has performed much better through this whole period compared to any of the others. Okay. We'll go over here to the Taiwanese. We'll go to the yearly. We'll look at the yearly. Yep, they're in the positive as well. 139.03 all the way up to 151. And the highest in the same was much earlier in the sort of January period. And I think in that period there was a lot of talk about support from the Trump administration to try and get them back into investing in America. And obviously people would say, okay, they're coming over to America to set up a bit of a manufacturing, but at the same time, that's going to cost them a bit of money, so for the investment, and they'll only realise it a bit more. And that's the reason why it went down a bit. And then once, the sort of the fear of a trade war and all that, then it just really just dropped back to where it was, on the 8th of April, down to about, it was still ahead, even in the 8th April. See there, a year ago. So when we go down here, at the lowest point that it got, it was still, above that lowest point. So it's actually done quite well, obviously, because so many people are dependent, and people know that data centers are going to grow for AIs, that all these things are going to happen, and these chips are going to be required. So, expect this company to do well in the long run. Then we're looking at NVIDIA. NVIDIA has had from a year ago, 84, all the way up to 147. This was again in the sort of January period. It jumped again up similar levels in February, and its lowest point, it's still 94 compared to 84. It was still $10 above its lowest point. So don't expect this stock to become cheaper, substantially cheaper. So it's holding its place. But the thing is, you got to remember, and I'll go back to that, what it's lost is in the last 6 months. Most of them last 6 months, even though, look at the last 6 months, the sort of dip, the high that it got, 26. This is the Taiwanese company. So everything in the last 6 months has gone down in that regard. It's trended down. It initially trended up. You could say really the last 3 months is really what happens, because if you take a look at all these things, look at all of them, go to here, it's more or less in the sort of last 3 months. This one, Meta, a bit longer. Google, last 6 months, more or less. Again, Amazon, last 6 months. Last 3 months. So you're looking at a sort of a 3-monthly period when most of that. So because we're only seeing a percentage. The percentage is much higher, is what I'm trying to say. These percentages are going to be much higher from a last 3-month period in comparison. Okay. Where NVIDIA and the chip manufacturer had the biggest ones. Why would they have the biggest ones? Because they're producing hardware mostly. And, it's manufacturing. If the economy goes south, there's going to be less manufacturing, isn't there? That's why they had a bigger drop in the last 3 months compared to these companies, which are more software-based. So the software-based ones had less of a fall. But they are dependent on these hardware companies, in particular, NVIDIA and TSMC, for their chips. You can't have data centers, you can't have AI, you can't have anything like that. You can't have modern commerce, basically, without these sort of entities. So expect these companies to rise substantially, because we've got growth in AI, we've got growth in robotics, we've got growth in, and all these things require software and chips to happen. Now, there's going to be players out there that are creating robots and other new systems and whatever else in manufacturing, fourth industrial revolution stuff. They are going to go substantially higher because they're coming from a lower base, okay? They're coming from a massively lower base. And there's, a few companies in there. What's the other one called? Let me just pause for a sec so I can actually find it, and I'll be back. Okay, resuming. So I'll give you a bit of an idea what the sort of speculative side, remember, speculative. Okay, this is not advice for anyone other than those who may be less concerned about ripping up money. So Joby Aviation Incorporated, they're actually still in the development of developing all-electric vertical takeoff and landing aircraft intended to operate as commercial passenger aircraft. There could be potential if some of their ideas. It's a company to keep an eye on. I'm not saying invest in it unless you've got money to rip up, and you don't mind losing, So if they basically develop something substantially, there is in the background some noise that potentially this company could get some future military contracts, maybe. Uncertain. So that's one. This is another company that's privately owned at the moment, but they're getting a whole lot of contracts from the government. Anduril, they're getting a whole lot of contracts, and the problem, they've got a good AI system that it's far more advanced than the F-35 network-centric system. So let me give you an example. There is network-centric, where through Link 16 and Link 22 communications, where you've got different platforms that can communicate with themselves and transfer data and all that. What the F-35 has is got a seamless system where they are basically what one can see. They're not sharing. They're completely integrated with each other, and what one sees, the others see, so to speak, through their communications, the way they operate. So they are integrated in a sense. Obviously, if you get cut out of the integration system, that's a problem in terms of mission planning and the ability to utilise. It becomes a paperweight. This is what Canada's concerned. But the Canadians have already put money in. I don't understand. I've criticised the decision of the Canadian government to go for an aircraft that is actually just ridiculous. The Swedish aircraft is a good aircraft, but it is inappropriate for Canada. It doesn't have the range. If I was going to go for anything as a fourth generation aircraft with range, it would be the Rafale fighter, because it's got greater range than any other fourth generation aircraft, which is independent of the US. So, so it doesn't make sense to me. It can do about 1,850 kilometres with 2 drop tanks. So where no other aircraft can sort of match it unless you're looking at F-15s and stuff like that. So they have another option. They could always say, okay, to the Americans, we'll take it, but we're not going to use the mission planning stuff and all that. We're going to take that out, and we're going to do something similar to what the Israelis did. They've got their own electronic warfare. That they don't really have to change, but they have their own mission computer systems. So they have opted out of that integrated model and have got their own mission computers inside. Canada could do something similar, and and still get a good aircraft. So it's a bit, it doesn't make sense. What they're doing is just basically, they're just being Canadians that are pissed off with Trump. That's really all it is. So, but it's ripping up a lot of money just to basically, give the old Trump man a bit of a fist, show their anger to the Trump man. But, whatever. It's ridiculous. Anyway, there you heard something else that you probably haven't heard from anywhere else as options. So this company is a private company currently, but it's estimated, about 42.5 per share if it goes public. So keep an eye out for this company. I have a lot of hopes. I think this company has the potential of becoming the next Lockheed Martin. So within the military industrial complex, this is the one that I think if it actually issues an IPO, I'll be buying into it. It's got some really innovative solutions in the drone market where it could dominate the whole industry, and also a whole lot of other systems that it's got, military systems, cruise type weapons, Uh, they've got this really sophisticated, as I said earlier, sophisticated way of integrating all their platforms with this AI so they can actually see, they've got this ability to see the entire battle space and how things are interacting with each other. So they're able to, have a sort of a bird's eye view. It's without complicating all the discussion. I'm not going to use military terminology, but they can actually, mass fly them together and all these sort of vehicles, autonomous vehicles, and also their autonomous munitions as well. So they've got a lot of things. This is the autonomous vehicle that can fly with the 6th generation fighter or even earlier with the F-35. So these are little scout things that they've developed, underwater things. They're very much a great innovator. They have a lot of these different autonomous systems that they've developed with AI systems. And a lot of smaller cruise type weapons. This is some of their hypersonic testing. So they have the potential to come up with solutions that no other company, and they're actually better priced. Their products are better priced compared to what Lockheed Martin are offering and stuff like that. They can provide similar solutions at a more competitive price, which means that the US military and any other military that the US allows exports will get more bang for their bucks. So that's one that I think that if it goes public is going to really go high. So I'd keep my eye on that as an investor. Yeah, but otherwise, let me get out. Otherwise, it's just to give you guys a sort of an understanding of the way I sort of look at things. I look at opportunities that haven't even gone to IPO, companies that I know in order for them to grow, because that company's already got a number of contracts, their own investors, having done a bit of a background, don't have enough money to grow the company to the level that it needs. They will have to go to an IPO. They will have to, in order to grow. There's no other way around it. I think they're a bit reluctant currently. They want to see how far they can go with some of the government money and, their R&D and all that. But to really grow the industrial base in that regard is going to take a lot. The other innovation, they're using fourth industrial revolution sort of systems, and they can actually, one of their systems, I think they said that it has about 80% less manufacturing steps in a sense. So they've actually been able to put together some of these weapons and some of these like loitering munitions and some of these autonomous munitions. They've been able to put them together more economically. That means the production method has substantially cut out all the steps in the production method. So they're able to build components using the fourth industrial revolution fabrication methods, additive manufacturing as it's called in the vernacular, and put things together way cheaper. And with their software, and this is their trick, that means they've got the weapon components, they've got blades and stuff like that, and surfaces that are produced really quickly using these additive manufacturing methods, and then software to make them really intelligent systems. So the cost of production is substantially lower, 80 or more percent compared to the big players. So they have the ability to really just go like rocket up and become a massive company. So it's a company that I'm keeping an eye on. Let's put it that way. I'm saying to people, keep an eye on them, And there's going to be a lot of other companies, if you do your own research in that regard, that you will find that have got those sort of potentials. But for now, for most mums and dads and whatever else, those sort of NASDAQ sort of blue chip stocks that have been pounded a bit in especially the last 3 months, they are likely to go, they'll reverse quite a bit. And when they do that reverse, because already, as you can see, most of the sort of manufacturing ones and all that are already like close to that 30% number, and after that, it's just cheap money and low interest rates. That's what they'll do automatically. So you end up making a hell of a lot more. Obviously, you lose a certain percentage points due to when you slightly increase the money supply, you also lower its value, price purchasing power over the long run. But if you've got cheaper energy, cheaper inputs, as I said in the other video, you mask that reality. You only feel it if your wages aren't following. So that's really how it sort of goes in that regard. The people who are investing in the growth are the ones that are going to get the most benefits out of a V-type recovery that will happen. So I know a lot of people are basically out there doom and gloom and jumping up and down, but the problem is at the moment is the central banks have got this momentum in their head dealing with the inflation. They're not certain, is this all the scare of the tariff war and all that? They got it wrong. It's not. What's actually happened is, yes, that's the spanner and a few other things that Trump did in the background to get the oil price down and to sort of cause the changes in the currency, manipulate the currency in the way that he did. But they haven't caught up, and they're still in the mindset: is there still a risk in the system? They still mentally they haven't been able to process it. Once some more data points come in, and that there is, sort of some deflationary signals that they pick up on, then they're going to get scared, and then they're going to start lowering interest rates. That's when things are going to explode in terms of, again. So what I'm trying to say is that if you get in before that, you're going to make more. If you get in the early stages, you're going to make less, but it's probably safer because you'll see the initial signal. What you do is up to you in that regard. So I leave it up to you. This is not financial advice. This is just Harry telling you what I think is going to happen, where things are going to go, and how these sort of markets are going to basically respond. What you do with that information is up to you, and you need to do your due diligence and you need to do your own research. I've given you some tools, whether it's in the property market, what to look and how to analyse the property market a bit better. You should always speak to an accountant to make sure that you've covered, you've ticked all your boxes in terms of your financing and stuff like that, and how much can you afford and all that, I mean, most people that do this sort of stuff understand this and would do it appropriately, but other people that are less enlightened about these things because it's not the thing that they do day to day or thing that they are more familiar with, just need to be aware that you need to take these things into consideration when planning anything for the future. So anyway, I hope that was of usefulness for people. If not, tough, can't help you. That's as much without getting myself into danger, so to speak, of giving advice. So I'm just giving you my appraisal, my overview. What you do with the information is up to you. And I take zero responsibility. Okay, just letting you know. Anyway, take care. See yous.